Hey everyone, welcome to Moving On with Ron, our first episode for 2019, where we go behind the scenes in the real estate industry to give you some tips and ideas and insight to help you in home buying and home selling. I'm your host, Ron. Happy New Year. Now, as always, what we like to do is go back and look at what happened in the prior year and give you a little idea of what's going to happen in 2019. And if you're one of our preferred clients or strong relationships, you're automatically going to be receiving our housing outlook for 2019 report. And will we see a market correction, also filled with great tips and ideas for buying and selling. If you'd like that, just email us at clientcare@Prime Property Team, and we'd be happy to send that to you. But all of our past clients, you're automatically going to get that anyways, okay? Now, I want to give you a quick overview here in this video, and as always, if you have more questions or you want more detail, feel free to give me a call anytime, okay? Now, let's talk about what happened in the economy. There's a few things we watch with the economy, which are foundations of real estate. That is economic growth, unemployment, and wages. Okay, so as you've been hearing in the news, economic growth grew at a substantial rate last year, 3.1%. To put that in perspective, anything over 2% growth is considered really strong. Unemployment is at a 50-year low. So we are at full employment in our country. Anything less than 4% unemployment is considered full employment, and we finished the year at 3.7%. Wages, the amount of money people are earning, was up 3.1% in 2018. That's a 10-year high. So people are making more money, there are more people working, and the economy is growing. All strong foundations for real estate. In 2019, we see a similar landscape pending any catastrophes happening with all those three foundations of real estate. Now, as for the data with real estate, we study 5 things. We study interest rates, unit sales, inventory, prices, and affordability. Okay, and I'm going to go through them quickly, and we can talk more in detail if you want to give me a call. Interest rates have been climbing since December of 2017. Interest rates are up between 15 and 20%. Okay, they were 3.95% on a 30-year fixed back in December of 2017, and now pretty much are at 4.5%, and they're showing signs of upward motion, and vacillating back and forth. We just got the latest news from the Federal Reserve that they are going to be flexible in 2019 regarding setting their overnight lending rates to banks, which could keep interest rates where they are right now, but the risk to the market is in interest rates moving higher, okay? Unit sales. We had a second year in a row of declining sales in the United States and also declining sales in Massachusetts. We finished the year down 7% in the country at 5.3 million sales, and in Massachusetts, we finished the year with 80,000 sales. So it's okay to have some declining years as long as we are within a sustainability zone of housing sales, which we are. So it's okay. We're not worried about that. It shouldn't be cause for panic. Prices. Prices have increased year over year, and last year was no change. We were up 4.6%, an increase to $264,000 in the United States for a home. And in Massachusetts, up 5% to $395,000 being the median sale price of a home. Again, 2019, we expect to see further increases in prices, all right? Inventory. This is really where the problem has been, as you've been hearing, and the reason we're having lower unit sales is lack of inventory, okay? We measure that in terms of months of inventory, and in the United States, we currently have 3.9 months supply of inventory. To put that in perspective, a normalized market should have between 4 and 6 months of inventory. In Massachusetts, that number is even lower. On average, it's a 2-month inventory cycle right now. So even though you might be hearing some headlines, other realtors, people saying, oh no, inventory is increasing. Well, the answer is yes, inventory is increasing, but off such a low bottom that it really isn't anything to be super alarmed about. In fact, it's a good thing to see a little bit of pressure relief on inventory, having buyers get a little relief so that this spring market may not be as difficult as last spring market, okay? The final thing we track is affordability. Affordability is simply how much the ratio of the median income to the median mortgage fee per month. And right now that number nationally stands at 17. To put that in perspective, in the market peak of 2007, the affordability index was 26. And at the market bottom, the affordability index was 11, and that was in the year 2012. So you can see we're moving up off the bottoms on affordability, sure, because prices are going up, but interest rates have stayed so level and wages have increased, that homes are still very affordable. So again, even though you're seeing prices increase, don't think that you may not be able to afford a home. So hopefully this information has helped you, has filled you up and filled you in on what's happening in the marketplace and the economy. If you'd like more details or to study your town specifically, because all real estate is locally driven, give us a call anytime or shoot us an email. We'd be happy to help. Prime Property Team, serving, educating, and guiding you home. Take care.